Hello traders, thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is 𝗪𝗲𝗍𝗶 from Traders United. Risk disclaimer. House rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst. Having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis, conference board consumer confidence. Now, what is the conference board consumer confidence in USA? The Conference Board Consumer Confidence Index (CCI) is a widely recognized economic indicator in the United States designed to measure consumer sentiment about the economy. It is based on a survey of approximately 3,000 households, making it a robust and statistically significant gauge of public opinion. Each month, respondents are asked to evaluate both current economic conditions and their expectations for the future. The survey focuses on several key aspects of the economy, including labor availability, business conditions, overall economic situation. Okay. On February 25th, 2025, the Conference Board Consumer Confidence Index for the United States was released. The previous reading stood at 105.3 with a forecasted value of 102.5. However, the actual result came in much lower at 98.3, making a significant decline in consumer sentiment and falling well short of expectations. So overall analysis is that we got a lower than expected figure of 98.3, which suggested that the US consumers are increasingly concerned about the current and future economic conditions. The sharp drop from 105.3 indicates that consumers are more cautious, likely due to factors like uncertainty in the labor market, inflation, or overall economic growth. This could lead to reduced consumer spending, which is a major driver of US economic growth. Since the Consumer Confidence Index is a key economic indicator, the much weaker than expected result typically signals economic weakness in the United States and could dampen investors' sentiment towards the US economy. As a result, the US dollar might weaken in response to this disappointing data. Now, let's talk about the effect on euro dollar currency pair. Given that the consumer confidence index negatively impacts the outlook for the US economy, the US dollar is likely to face downward pressure. In contrast, the euro could strengthen as a result of this weakness in the US dollar. Therefore, the euro dollar currency pair should see an upward movement, as the euro would likely appreciate relative to the euro to appreciate relatively to the US dollar. So due to the disappointing Conference Board Consumer Confidence Index result from February 25th, 2025 indicates potential economic challenges for the United States. As a consequence, the euro dollar exchange rate is expected to rise, with the euro gaining against the US dollar. The next one is the gross domestic product GDP in Canada. Now, what is the gross domestic product GDP? Gross domestic product or GDP is a monthly indicator that measures the monthly change in the total value of goods and services produced within a country. It is a key reflection of economic growth, business activity, and overall economic health. GDP is often used by governments and central banks to shape economic policies, and it is closely watched by investors and financial markets because it gives insights into a country's economic performance. Look at the GDP data for Canada. Previous number was minus 0.2%, forecast was 0.3. The actual number is 0.2%. The actual GDP for Canada came in at 0.2%, which was slightly lower than the forecasted 0.3%. While the actual figure indicates positive growth, it is still under the forecast, signaling a weaker than expected performance in Canada's economy during the reported month. This modest growth suggests that Canada's economy may be experiencing some challenges or slower movement compared to earlier expectations. When interpreting this data in terms of the USD-CAD currency pair, the results suggest a mixed impact. The Canadian economy has shown growth, but not at the level expected. A lower than um, forecast GDP typically reflects some economic sluggishness, which can weigh on investor sentiment towards the Canadian dollar. For USD CAD, the US dollar could potentially strengthen as a result of this weaker than expected Canadian GDP figure. The USD might appreciate relative to the Canadian dollar because the Canadian economy is not growing as robustly as anticipated, which could lead to less demand for the CAD in global markets. The US dollar might benefit more in such cases, especially since the US economy has been relatively more resilient in recent months compared to Canadian economy. So in this situation, the USD CAD pair would likely move higher. The US dollar appreciates and the Canadian dollar it shows weakness. That's the expectation overall. So the conclusion is, given the disappointing GDP growth in Canada, the USD CAD exchange rate is expected to move up, measuring the US dollar, it is likely to strengthen relative to the Canadian dollar. This is because the lower than forecast GDP data indicates weaker economic performance in Canada, making the Canadian dollar less attractive compared to the US dollar. Previous week we discussed about the euro dollar and British pound, and I will show you the chart as well in a second. If you go over to the euro dollar currency pair, I was expecting that we could get a potential bullish breakout in euro dollar currency pair, or market is probably going to drop from current levels. Well, now you see we got a bullish breakout, and the chances are price action is going to rise up further. I will talk a little bit more about euro dollar in next few minutes. Let's go back to the PowerPoint. Next one is the British pound GBP USD currency pair. So inside GBP USD currency pair, I was basically expecting overall a bullish price action, and you see we got a nice bullish breakout over here, and price action is probably going to rise up more. Now, if we take a look at current week economic events and data releases, you will notice that first of all, we're getting the ISM services PMI for the United States, and the currency pair that is most likely going to get the effect is the euro dollar. And the date and time is March 5, 3 p.m. UTC. Next one is the March 7th, 1:30 p.m. unemployment rate related to Canada. And the pair we are going to discuss is the USD CAD. Now let me talk a little bit more details. So what is the ISM services PMI? ISM stands for Institute of Supply Management, and PMI means Purchasing Managers Index. The ISM Services PMI is a monthly report that measures the health of the United States of America services sector. It is a key economic indicator that helps analysts and policymakers understand how the US economy is performing. Now, what does the ISM Services PMI measure? Well, it measures the employment, prices, inventory levels, business activity, new orders, backlog of orders, new export orders, imports, supply deliveries. Okay. How is the ISM Services PMI calculated? Let's discuss it. The ISM surveys over 400 purchasing and supply managers in services firms in the USA. The report is released on the third business day of each month. Now, the usual effect is that actual greater than forecast is good for US dollar currency. Okay, now why traders should care? The ISM Services PMI is a leading indicator of economic health. Business react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So, what does the ISM Services PMI indicate? Well, usually a reading above 50 indicates expansion in the services sector. A reading below 50 indicates contraction in the services sector, which is not good for the economy. A persistent reading above 50 suggests robust economic growth. A reading below 50 could signal an economic downturn. Now, the ISM services PMI numbers are, well, the previous number was 52.8, the forecast is 53.0. The actual data did not release yet. Now, what to expect if the actual data is greater than 53? Well, if we get data that and the number is greater than 53, uh, it can lead to a bearish euro dollar to the as the US dollar strengthens. What to expect if the actual data is less than 53? Well, a lower than expected PMI signals weaker growth, which can lead to a bullish euro dollar as the US dollar weakens. So in summary, if the ISM services PMI is greater than 53, euro USD may move lower, but it becomes bearish. And if the ISM services PMI is less than 53, euro USD may move higher and it becomes bullish. Okay, next one is the unemployment rate, Canadian economy, and the effective currency pair is the USD CAD currency pair. Okay, what is an unemployment rate? Let's discuss it a little bit. The unemployment rate is the percentage of total labor force that is unemployed but actively seeking employment. It is calculated by dividing the number of unemployed individuals by the total number of people in the labor force, which includes both the employed and those actively seeking work, and multiplying by 100. The unemployment rate is a key indicator of economic health, reflecting the number of people who are willing and able to work but cannot find jobs. Now, how is the unemployment rate calculated? The unemployment rate is calculated by dividing the number of unemployed people by the number of people in the labor force. It is considered an economic indicator that helps to understand the health of the Canadian economy. As of January 2025, Canada's unemployment rate was 6.6%, which is slightly lower than the previous month's rate of 6.7%. This is the second consecutive month that the unemployment rate in Canada has decreased. Now, why it's important for Forex traders? Well, I would say, although it is generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. And previously we got 6.6% number when we discussed about the unemployment rate. The forecast is 6.7%. The financial data did not release yet for the actual number. Now, what to expect if the actual data is greater than 6.7 forecasted number? Well, a higher than expected unemployment rate signals a weaker labor market, suggesting slower economic growth in Canada. this could lead to a bullish USD CAD as Canadian dollar weakens. And what to expect if the actual data is less than 6.7%? Well, a lower than expected unemployment rate signals a stronger labor market and potential economic growth. This could lead to a bearish USD CAD as the Canadian dollar strengthens. So, in summary, if the unemployment rate is higher than 6.7%, USD CAD currency pair may rise. The bullish for the USD CAD, that's what we're talking about. If the unemployment rate is lower than 6.7%, USD CAD may fall, bearish for the USD CAD. Okay. Now let's discuss the four pairs. So the euro dollar, US dollar versus Canadian dollar. And then we have the British pound versus US dollar. And last but not least is the spot gold. Okay, so Euro USD. Let's discuss about the Euro USD. Oh, well, the way I was expecting the euro dollar to rise up and actually breaks above 1.0533 level, and this is actually going to open the door for further gains. And the chances are euro dollar is most likely going to rise up more. And the next level we expect is the 1 point. Let me move this one. The next level that we expect in euro dollar is it's most likely going to be 1.0824. So the chances are price action is probably going to rise up more in coming trading days in euro dollar currency pair. Next we have the USD CAD currency pair, United States dollar versus Canadian dollar. Let's go over to USD CAD. Well, as expected and also based on the fundamental news events, I was expecting a bullish leg in USD CAD currency pair, and this area is probably going to find some sellers, and we might actually get some selling pressure over here, and the chances are USD CAD is probably going to turn around, and we could basically expect a top inside USD CAD currency pair now. So probably in coming trading days, USD CAD is most likely going to start the decline towards 1.4150 level, because the United States dollar is showing signs of a weakness. So euro USD is rising up, so the chances are USD CAD is most likely going to drop. Next one we have is the British pound versus United States dollar. Okay, let's take a look at GBP USD currency pair. Now, the GBP USD currency pair has been moving sideways for a few days, but has just broke the old swing high last week, signaling some potential bullish momentum. The market may be reacting to weaker than expected US data or a shift in market sentiment away from the United States dollar. Now, the key price levels to watch is we have a support level at 1.2332 with resistance now at 1.2810. We have a resistance right over here. Here it is. Okay. Okay. A bullish breakout above 1.2810 could open the door for further gains, while 1.2568 remains an important level to watch for any pullbacks. Now, the entry idea is look for a bullish breakout for above 1.2810 Okay, and look for a possible buy trade over here with the next target around 1.3047 somewhere over here. Okay, alternatively, if there is a pullback to 1.2568 level, consider buying near the support. So price could go back up and bounce back up. So the first criteria is price action is going to rise up from current levels. It's not going to stop. It's probably going to rise up more. uh, Alternatively, we could get a pullback right at the support level, and then market is going to find some aggressive buyers at or around the support area, and then it's going to resume the uptrend inside GBP USD currency pair. Now, as far as the stop loss is concerned, you need to place a stop loss below 1.2332 for long positions to limit risk if the price action reverses. And this helps protect your trading capital by minimizing potential losses in case the market moves against your trade. This trade could be invalidated if there is sudden risk on sentiment or positive US economic news, especially if the US dollar strengthens unexpectedly. Since the British pound versus US dollar involves the US dollar, any changes in Fed policy affect the pair. A stronger US dollar due to rate hikes or positive US data pushes GBP USD lower, while a weaker USD lifts the pair. For buyers, price action should not hit the 1.2332 support area. The next trade setup is for the spot gold. The spot gold has been moving up for many trading days, but has just printed a new low this week over here, signaling some potential bearish momentum. The market may be reacting to stronger than expected US data or a shift in market sentiment towards the US dollar. Now, the key price levels to watch out for is we have a key support level at 2771.62 right over here, with the resistance up here at 2956.18. Okay, and if price action breaks above 2956.18 level, the chances are price action is going to resume the uptrend. Now, the entry idea is look for a breakdown below 2830.55 support level, and once market breaks this level, the chances are high that price action is probably going to drop further towards 2771.62 price level. For stop loss, if you look for a sell, your stop loss should go above 2956.18 level, but you don't look for a sell at the current price level. You first wait for a breakdown, and once it happens, once market starts to decline and actually breaks the support level, then we are going to look for us as a sell trade. Otherwise, wait outside. If price action just keep going up, then let it go. So the idea is wait for the price action to break the 2830.55 support level, and then the chances are high that price action is going to drop further to reach the next level, the next support level at 2771.62. Now the stop loss should go above the resistance level at 2956.18 for short positions to limit the risk if the price action reverses. This helps protect your trading capital by minimizing potential losses in case the market moves against your trade. Now, the trade could be invalidated if there is sudden risk on sentiment or negative US economic news, especially if the US dollar weakens unexpectedly, since the spot gold involves the the XAUUSD pair, you see it involves the US dollar. So any changes in the Fed policy affect the pair. A stronger US dollar due to rate hike or positive US data pushes the spot gold lower, while a weaker USD lifts the pair. For seller, price action should not hit 2956.18 resistance level. Okay, so that's the analysis, and let me go back to the PowerPoint presentation. So if you have any questions, feel free to type inside the chat box and I will be happy to answer you. So what we have learned today, I have discussed about in detail the ISM services, PMI, which is related to the United States of America and the impact on the euro dollar currency pair. I also discussed about unemployment rate in Canada and what you should expect it and what kind of a price action we're probably going to get in the USD-CAD. I also discussed about the price action in euro dollar, USD-CAD, GBPUSD, and spot gold. These are the assets to watch out for profits. So what you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, March 11, 2025 at 12 p.m. UTC time.